Traders, Gary Wagner here, just about 12:30 in Honolulu, 6:30 in New York. It is Thursday, April 26th, 2018, and this is the Daily Report for Gold and Silver. We did have continued downside pressure on the precious metals complex, with 3 of the 4 precious metals closing lower on the day. Palladium was the exception. We'll get to that in a second. But gold closed down about $4 or $5 on the day at $13.18. About a 3 to 4 cent decline in silver at $16.50, and the majority of that due to a dollar which continues to rage to higher values, gaining almost a 0.5% today, a net gain of 44 points at 91.39. Now, palladium closed at $9.78. That was up about $10, and we did issue a trade alert implementing a long position in that precious metal. We'll discuss that in detail as we pull up our technical studies. Dow Jones Industrial Average up 238 points at 24,322. And finally, Bitcoin gaining about $280 with both the CBOE and CME futures exchanges both closing at 9,180. Traders, continued dollar strength is weighing heavily on the precious metals complex, which has been trading under pressure for the last 8 trading days. With the exception of palladium, the other 4 precious metals have closed lower on the day. Gold down $4.80 and currently trading at $13.18. That, of course, is basis most active June futures contract. Today's lower pricing did result in gold's price point coming to our first target area, which is a Fibonacci-based retracement area, and it is also a Fibonacci harmonics area, created when you have 2 different data sets or time cycles, both conveying the same price point. In the case of gold, we have a 78% retracement. The second data set that we use for this harmonics is a 38% retracement, and that is from a much longer and larger data set, 1238.50, up to this year's high. The fact that a harmonics occurs at this level gives it additional strength. However, should gold not be able to find support in this level, really on a technical basis, the next major level of support comes in right above 1300. First of all, these lows that occurred last month, and then secondly, that corresponds to a 50% retracement of the long data set. For those reasons, we will remain flat with no active trades in gold. However, we did put on a palladium trade. We'll talk about that in a second. Traders, silver is also trading lower on the day, although fractionally lower, only off by about 3 cents. And after last week's dramatic climb, in which it actually traded above 1926, we have seen a considerable amount of value washed out of the market. Our current level of support comes in at the 61.8% retracement at around 1637, and then major support in silver does not occur till about 1610, 1612, and it is based upon these series of lows. The one thing that we can say about silver is it is now trading back in the narrow and defined range that has been such an overall characteristic since February of this year. And traders, to clearly illustrate how strong of a factor dollar strength has been to the recent decline in precious metals pricing, I've put up a split chart with gold on the top and the dollar index on the bottom. It is a daily chart. When we look at the last, say, 8 to 10 trading days, we can see that gold topped out $1,360, and since that time has actually lost a little bit over $40 in value. When we look at the dollar index, we can see that over the last 10 trading days, 9 of them have resulted in higher pricing on the day. In fact, there is only one instance over the last couple of weeks in trading in which the dollar index closed lower. The reciprocal and opposite can be seen in this gold chart, in which out of the last 6 trading days, there was only one occurrence of gold closing higher on the day. And traders, of all of the precious metals today, there was only one that closed in positive territory, overcoming dollar strength on the day. That metal was palladium. We also sent out a special trade alert recommending the initiation of long positions in palladium, the June contract. The market was trading at 977.70 when we bought in, currently at 978.80, so about $1 higher than our entry price. We also placed a protective stop on this trade at 949. It puts it just below the 0.618% retracement at 951.30. That is also a harmonics area because our longer data set has a 23% retracement, which comes in at 947, and 951 for the 0.618 right in this area. Traders, maintain your current long in palladium, maintain your current stop. Traders, interesting action in Bitcoin futures today. Although Bitcoin closed above 9,091.65, and that is a net gain of $165 on the day, what is most interesting is the selling pressure that came in earlier in the day, which took pricing to an intraday low of 86.70. We've got a gap right here, and we can see that today's lower pricing actually came in and filled that gap. For that reason, I believe that we could see Bitcoin prices firming in this area and challenging these recent highs at about 9,700. If they can effectively take that out on a closing basis, we could be making a stab for pricing above 10,000. That would be the first occurrence of that high price since March of this year. Traders, we changed it up a little bit in that we added palladium as one of the precious metals that we are trading this week. The reasons are very, very clear. There's a whole set of different fundamental factors at play, and on a technical basis, the palladium market has been the only one of the precious metals complex that's been able to overcome dollar strength, and that is significant. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for the weekly wrap-up and review. Bye-bye.